What's going on, guys? It's Expo Jesse. Today on Teaching Tuesdays, we're going to be going over what are prop firms and how I use them. So I am just a disclaimer here. I am a consumer just like you. The information that I am showing today is public information. It's how I have consumed the information, how I understand it. I am not going to try to mislead you or try to convince you one way or the other. I do not know everything. It's very important for you to do your own research, especially with prop firms. There's prop firms out there that are very predatory to their consumers, and they don't want their traders to succeed. Then there's prop firms that clearly do want their traders to succeed, and so it's up to you to find out which prop firms are which. And I can tell you which ones I am with, but that doesn't mean that I recommend them for you to use. So please do your own research. I am not responsible with what you do with the information found in this presentation. So starting off, what are prop firms? Prop firms are companies that provide its traders with their capital in exchange for a cut of the profits that the trader makes. So what that means is they will fund you with their money or their risk, and their cut is that they take a percentage of your profits. So most prop firms allow their traders to trade their capital with no responsibility for the losses that are accrued on the account. Most companies have a split between 75 and 90% in favor of the trader. So if you make $1,000, you'll take home $750 to $900, and they will take the rest. So you get a huge percentage of it. Most prop firms have been around for a while, right? Most prop firms early on would take at least 50%, or so I've read, so I've been told. But that is so the prop firm space with more competition has been a good thing for us as traders. So how to get started? The most common way to go from zero to funded with a prop firm is to pay a fee to take their evaluation, pass the evaluation, then get funded. Most firms have their evaluation rules public and what their expectations are for you as a trader. These rules will change from firm to firm, so it is very important that you know everything that you are committing to with that firm before you spend any money on an evaluation. So, like I said, please do your own research. So the process, this is kind of the standard process. Right now, I don't know of any options prop firms. I think that's a space that hopefully we'll get some prop firms, into the marketplace with that. But for now, there's futures and there's forex, and most of them have the same process here. So step one is evaluation. So you pay a fee to the prop firm and you take their evaluation. During this stage, they'll evaluate your trading style, your risk management, the symbols that you trade, and even when you trade. Some prop firms have this as a one step and some have it as several steps. Most of the forex prop firms have it as two steps. Most of the futures prop firms that I see have it as a one step. And during this stage, when I say they're evaluating your risk management, that's why it's very important to know what their rules are. For example, on forex prop firms, a lot of them have a daily drawdown and a max drawdown. But if you hit your daily drawdown, you fail the account. Now, on TopStep, which is a futures prop firm, if you hit your daily drawdown, you do not lose your account and you do not fail. But with all of them, if you hit your max trailing or your max drawdown, then you do fail. So that's step one. Usually you have a profit target. It's around 5 to 10% of the account value. And then you have your max drawdown. So essentially what you're doing, let's say you have a 50K account, and on one broker or one prop firm, you're supposed to make 2,500, or you can lose 2,500. You're supposed to make 3,000. So you're essentially asked to double your account because you're not really getting a $50,000 account. You're getting a $2,500 account, and you're being asked to make 3,000 of it. But you're using the 50K as a margin. So you can be very aggressive with prop firms, and we'll get into that a little later with money management and stuff like that. But as far as the evaluation goes, you have generally about a 5 to 10% drawdown and a 5 to 10% profit target. So step two, after you pass, some prop firms require you to pay an activation fee. Some prop firms, I didn't finish that, but they include the fee in their initial cost. So some prop firms, seem like they're cheaper, $50, $35, $19 to start up, and then you pay an activation fee of $85 or $100 or upwards of that. And some other prop firms have that included in the evaluation, where their evaluation's $100, but you're paying a little less since you don't have to pay the activation fee later. Step 3 is payouts, what we're here for. Each firm has separate rules, but after a minimum amount of days and sometimes a minimum balance, you'll be eligible. Just depends on the prop firm. I'm not covering every prop firm's rules. I am, to be very clear, I'm not their support, so I don't know their rules on every prop firm. So it's very important for you to read on their website and go through their FAQs. And then step 4, rinse and repeat and scale up. A lot of these forex prop firms, if you hit a certain profit percentage in the quarter, then they'll scale you up by a certain percentage, 10, 20%. So little easy way to get more capital without having to do anything. So risk management. As with any risk management, it's very important to know your own statistics and know how frequently you lose. This will tell you how much that you're able to risk. So if you don't keep a trade journal, that's step 1. Prop firms, there's the argument that only professional traders should trade on prop firms. I think that any trader should trade on prop firms because it's a lower risk capital initially. Obviously you have to make that decision for yourself. And like I said, that's just my own opinion. It's not the fact of the matter. So please do your own research. But for me, I think that your initial risk is capped. And I've heard a lot of people who lose a ton of money, 5, even 6 figures of their own capital. Their, worst case I've heard is losing their kids' college funds and whatnot. And you don't have that risk with prop firms that I have used. So it's very important for you to know your risk management. And what I'm getting at is, even if you're newer to trading, you should be keeping a trade log. And if you don't know your stats, then you don't know how frequently you lose and you don't know how much you can risk. So for me, on a brand new account with no buffer, I know that typically I don't lose more than 3 trades in a row. I've only lost, I think my cap is 4 trades on my trade tracker, which has over 2,500 trades of mine. So I know that it's very, very uncommon or unlikely that I'll lose 10 trades in a row. So I think it's pretty safe for me to risk 10%. I can risk a little more. And if as my buffer goes up, I will risk more. But for a brand new account, I'll risk 10%. So if my drawdown on a 100K account is $10,000, then I'll risk $1,000 per trade. I also have a 3-strike rule. If I lose 3 trades in a row, I'm done for the day. Now this is, if I'm feeling any type of emotion, I'm done for the day. This is not a one-size-fits-all. This model here is just what works for me personally. Again, you have to know your statistics. You have to keep a trade tracker to know your statistics. So if you are not doing that, please do it. It doesn't take that long. I think I spend probably 5 or 10 minutes a day on my trade tracker. And then, like this past Teaching Tuesday or a couple weeks ago, we went over all my data and found out that if I just did a 1R account, then I'd make pretty close to what I would on a trim account. And so now I'm doing an experiment on a 1R account and adding more trades, and it's doing very, very well this month. But if I didn't keep track of my trades, I'd have no idea. So please keep track of your trades. Money management and withdrawals on prop firms. So I'm a big advocate for paying yourself, and so are the good prop firms, the ones that want you to do well. They all want you to take payouts. It is very important to keep a buffer in your account to account for losses. With that said, when you take a payout, you're paying yourself, and psychologically that will impact your trading in a good way in my eyes. After you achieve a payout, you might find yourself trading less scared or a little more close to the vest, which many times is beneficial. For me, when I trade with less fear, I'm willing to take risk. As long as those risks are calculated and follow my trade plan, they are acceptable risks to me. It's not gambling. It's not risky in that way, because I know that 75 to 80% of the time I'm right. And if I were sitting on, a huge amount of money on my prop firm accounts, I'd probably be a little more scared to trade because I don't want to lose that money. And when you're trading scared, you're not willing to put in the risk that is required to make money. You got to risk money to make money in this market. That's no secret. So here's 2 of the top prop firms that I've heard of on futures, and going to compare their evaluation and their withdrawals. And so here we go. TopStep. 2 days minimum on your evaluation. They have a consistency rule of 50%, so you can't make more than half of the profit target in each day. So if your profit target's $4,500, you can't make more than $2,250. Max contract size is dependent on which size account you purchase. One rule, don't hit the max loss limit. You do not fail if you hit the daily loss limit. They just deactivate your account for that day, so you can't go on a bender, which I think is a really good thing. Their max is 3 funded accounts. So you can have 3 150Ks, you can have a 50K, 100K, 150. They don't care. You can have a max of 3 accounts. With Apex, they have a 7-day minimum. Now they've ran promos with the 1-day pass. And honestly, if you pass in 1 day, either it was a really good day or you just kind of went max contracts and hoped to pass. There's no consistency rule on the eval. So you can pass in 1 day if you want to. You can pass in 7 days. Max contract size, similar to TopStep, is dependent on which size account you purchase. Their way to fail or thing to watch for and how to fail is a trailing threshold, which does account for unrealized P&L. So if you go up, the trailing threshold on a 50K is $2,500. If I go up $1,000 in a trade and then close for $0, then I am $1,000 in drawdown. I can only lose $1,500 on the next, or total on the account. And they have a max of 20 funded accounts, which is a lot. Here's the withdrawals. TopStep has 5 days of $200. No consistency rules that I know of. I'm sure that if you make 100K on the day and trade 500 contracts, they're going to want to have a talk with you. And I do know that they have a disclaimer that if you trade more than 200 trades or contracts, I'm not sure which because I never get that close, but if you trade more than 200, they do have the right to call and ask for your strategy. But there's no consistency rules. If you trade like a normal human, then you're probably okay. You are definitely okay. No max withdrawal per pay period, but limited to 50% of the profits until 30 days. Now you do get 50% of the profits. The other 50% stays in your account. So they take their split. And on both of these firms, the first, 10 or so $1,000 is at 100% split to you. So let's say you make $5,000, you can take out $2,500 and that $2,500 is all yours on TopStep. Like I said, the daily loss limit will not fail you. Hitting the max loss is the only way to lose. Apex has a 10 trading day minimum, 30% consistency rule. So if you make, let's say you make $1,000, you have to do 1,000 divided by 0.3, and then that's the number you have to hit before you can take a withdrawal. Not the worst thing in the world. Consistency is definitely important. It's just so that you don't gamble your account and then they have to pay you out when both of you guys know that you're not going to be there to be a live trader. So it's very important to have consistency anyways as a trader. Just something to watch for. Max withdrawal per pay period depends on the account. On the 50K, you can take out a $2,000 payout for the first 3 months, and then after that, it opens up and there's no max. Trailing threshold will cause you to lose your account, but that stops after you reach the minimum payout, which is $2,600 on a 50K account. So after your account goes past $2,600, then the trailing threshold stops at $50,100 and does not trail any further. So let's do some math. Let's say you have a $500 budget. You're thinking about opening up a personal prop firm or personal account brokerage, or you're thinking about going with a prop firm. Let's say your risk is set at 10% of your account, and you're going to end up the month up 10R, so 10 times your risk. So here's a personal account. We'll go on the left side first. 10% risk is $50 per trade. Risk is really $400 because you can't trade, the micro NASDAQ if you're under $100 due to margin requirements. So your money at risk is really $400. And after 10R of making $50 a trade, your money earned is $500. With that same budget, 150K evaluation on TopStep is $150. You have $149 to activate the account. So this is assuming that you already passed your eval. Risk is 10% of $4,500, so $450 per trade. Money at risk is $299. Your money earned is $4,500. So what's the drawback? You can't take advantage of the 60-40 rule for futures trading. For those who don't know, 60-40 rule is a tax break for futures traders, where 60% of your earnings are taxed as long-term capital gains tax, and the other 40% is taxed as short-term capital gains. Please see a tax professional. I am not one. Like I said, I'm not one. We'll leave it at that. Scaling with prop firms. Most prop firms will give you access to multiple accounts up to a maximum amount of capital allocation. For TopStep, that's 3 accounts maximum, so you can get up to $450K of capital allocation. With Apex, that's 20 accounts. They have 300K accounts, so you can get up to $6 million in funding. For forex firms, it ranges between 50K and can go upwards to several million. As you can see, you can easily scale up to working with millions of dollars of equity. Most firms will be on a simulated account even after you are live. So that's a little caveat that I didn't talk about earlier. Most prop firms, after you pass, they still have you on a simulated account. Most firms, I can only think of a handful, actually put you on a live account, and you sign documents and stuff. So if you do take a loss, really the prop firm's not taking that loss until they move you to live, and then they will take losses with you. So I think I say it in the next slide or a couple slides later, but trading on a prop firm is kind of the middle ground between demo trading, where you have zero emotion, you don't care if you win or lose, or trading with your personal funds, where you're very tied to that money. It's money that you earned through your hard work, and you don't want to see that lost. And so prop firms kind of are right in the middle there. So which is better? Like I said, it's a personal preference. For me, it's prop firms, but it just depends. I can scale up to multiple accounts per prop firm and trade with size that would take me years to achieve on a personal account. It would take me so long to trade with $6 million. So with that said, like I said just a few minutes ago, trading on prop firms limits my emotions. For me, it's the happy medium between trading on demo, which doesn't make me any money, and trading with my personal funds, which obviously makes me money. The profits are real, and most of them are mine, but the losses are not mine in the end. So that's what prop firms are. I'm sure there's lots of questions, and we'll go through all of them here in a little bit. But most of these questions, if they're about certain prop firms, please visit their FAQs, their website. If I give you information, it's not coming from them. So it could be false, and you have access to the same information that I do. So please do your own research and make your own decisions. But that is Teaching Tuesdays, covering over prop firms. Hope you guys enjoyed.